Hi, welcome to the Let's Talk Forex podcast. We have a very good one lined up for this episode, and it's all about how to trade with a full-time job, something we know many traders battle with. Remember to get hold of us on social media, Facebook, Instagram, Twitter, and LinkedIn, and please send any questions through to podcast@fxscouts.com. Enjoy.
Hey, Alison.
Hey, how are you doing, Chris?
Yeah, I'm pretty good. How are you?
Yeah, I'm doing well. Very well.
Good. Glad to hear it. So this week, as promised, I think we're going to talk about something that's going to be very interesting to a lot of our listeners.
Yes.
We're talking about how to trade with a full-time job, which I think that's how a lot of beginners start out. And it's one of the most common questions that we receive. And it's something that we've both battled with. It's how do you combine forex trading, especially when you're starting out and you're just trying to learn everything. You're trying not to lose too much money, and how do you combine that with a full-time job?
Yeah, exactly. I mean, I remember in the beginning, the time investment to learn to trade, it was massive for me. I spent so many hours learning to trade, like before work, during, after work, and the most difficult part for me was when I opened a demo account, because now I had like all these strategies I'd learned and all these things I wanted to try, but I couldn't find the setups based on the timeframes I was trading. So I was trying to trade the 1 and 5 minute timeframes. And the reason was I thought that because I had so little time, it would be better to trade on smaller timeframes, sort of before work or after work. But what I found is that I just ended up over trading. I was trying to recover losses all the time. Basically making all the classic mistakes that you do when you...
Yep, everybody does it.
Yeah, and you think to yourself, but I know these rules, I know what I must and mustn't do, but because you actually don't, basically because you sort of choosing the wrong timeframes is one of the biggest mistakes. You just start to think like it's impossible to trade if I have a job. And because you lose money, it makes you realize even more that you cannot give up your job and start trading, because you're definitely not going to make money. So it's a very difficult balance, I think, that most people find when they start trading.
Yeah, no, absolutely. I mean, when I first started trading, I was a young idiot kid, and I was treating it like gambling. I remember I was trading on Brent crude, CFD. And because I had a good understanding of economics, I was really arrogant. I thought I could predict the market, and I ended up losing £200, which is a lot of money for me back then. I ended up losing it very quickly indeed. It was a real slap in the face. I very quickly learned to use stop loss. And my greatest discovery was the trailing stop loss. I couldn't believe when I discovered the trading stop loss. I was like, oh yeah, this is magnificent. What an amazing tool it was. But yeah, look, panicking when you've got a losing trade, especially when you're doing these short time frames you're discussing there, coupled with having the stress of a day job, that's really not fun, especially when you don't have a solid understanding of your own trading psychology yet, or you don't have a fully developed trading plan. And this was when I started trading. This was back in the days before smartphones, showing my age here. Well, they had Blackberries, but I mean, that wasn't really a smartphone. So there was no mobile trading. So what was really important, I realized then, was to set alerts and indicators for yourself, because with a day job, you're not always going to be looking at the trading screen. You're not going to always be looking at the charts. So you need to have these alerts and indicators set up. You need to have a stop loss in place, and you need to have a trading plan that works with your day job.
Absolutely.
And that's what I realized.
So, based on our experience and based on, we did a bit of research to see how other people have done it. It's been quite an interesting podcast to put together, I found. But just to give you some tips, there are some factors that you have to take into account when you are trying to figure out how to fit trading into your day. And firstly, you got to work out which trading sessions are open when you're at work. So for us in South Africa, we're pretty fortunate that during the London and the New York trading session, they sort of open during our work hours, but the New York then carries on later. So there is some time to trade sort of after work, and there's still some nice volatility in the market then. But then you've also got to look at, do you get breaks in your work day? I mean, is it possible to then look at the charts, and do you have time to trade before or after work? And once you figure this out, and you really sort of, you've got to get quite mathematical about it, or, sort of strategic. Once you figure out how much time you have to trade and when you can trade, then you'll get a good idea of the assets you can trade and which trading style you can then start to use.
Yeah. So as you mentioned there, you touched on there, the markets, they open at different times during the day. The Forex market is open 24 hours a day, Monday to Friday, right? This means you can trade the Forex market. Technically, you can trade it whenever you want, but you want good volatility in the market. So the New York and the London trading sessions are the most active, and that crossover between the two is the best time to trade, I find, especially if you're in the same time zone, similar time zone to you in South Africa or to me here in Europe. And this we're going to see the most liquidity as well. And we'll put a link in the show notes. We've got a helpful tutorial on the site for Forex trading hours. But yeah, so this is really the time, if you can afford to do it, this is really the time you want to trade. And
then if you want to look at cryptocurrencies, they're offered on a 24/7 basis, which means that you can trade them at any time of the day, including over the weekend, which is kind of why they're so popular. So if your goal is to trade part-time, then, cryptos may present a good solution. But as we always talk about, they are very volatile assets. And unlike fiat currencies, they don't have the same fundamentals behind them. So they're very much based on market sentiment. That's why we always, warn traders to really take or exercise extreme caution when trading on cryptos.
Yeah. And there's also, you can trade stocks and ETFs as well as CFDs. But this, you're going to have the least amount of time to trade. The market in the United States opens at 9 and then closes around 4 p.m. Eastern time, US Eastern time. So that's a really short time window. And this is going to be the same period when a lot of people are at work. And that obviously depending on your location. So until you're in a position to trade full time, stock CFDs, ETFs, they're interesting. There are a lot more fundamentals behind them, but they're tricky to match with a full time job.
Exactly. And then after that, you're going to have to look at the amount of time you have to trade in the day. So how many times a day will you be able to check your charts? If you have a very busy job, you may only be able to look at them sort of once or twice a day, as I mentioned earlier. And if this is the case, then you may want to ditch looking at the 1 or 5 minute trading charts, because you'll make so few pips in each trade. And for traders that do trade these very short time frames, you're going to be using a lot of leverage. So it can be very dangerous to let these trades run without monitoring them very closely. And if you can't look at where you're going to be setting your stops and takes profits, you'll probably get stopped out all the time as well. So the 1 and 5 minutes they're notoriously tricky for people who can't trade full time and can't dedicate 1 or 2 hours at a time to looking at these charts.
Yeah, you need to be a scalper. You need to be a full-time trader if you're going to trade these 1 and 5 minute. Yeah. And as you said, and the stress as well of having highly leveraged trades open, which you can't monitor when you're also dealing with the stress of a full-time job.
Yeah.
That just sounds really unfun to me.
Yeah. And it's going to really affect your trading psychology.
Absolutely.
You're going to lose.
Yeah, you're going to lose, and then you're going to end up in a position where you're trying to recover losses, and you're going to end up in a downward spiral. So I wouldn't recommend the 1 and 5 minute charts when you've got a full time job. But so many traders, based on that, they find that swing trading or position trading is what works. And so swing trading involves identifying longer term trends and allocating a specific amount of capital to take advantage of these longer term trends. It's quite different from day traders because, a swing trader is happy to hold on to a position for several days at a time. Whereas if you're a day trader or a scalper, you're going to be closing your positions either at the end of the day or you're going to be closing multiple positions a day. So the goal of swing trading is to capture a trend's long-term momentum while avoiding all the minute-by-minute noise and volatility.
Yeah, exactly. And they use technical analysis to identify trading opportunities. They use trend lines, moving averages, various chart patterns, support and resistance, of course. And once a trading opportunity is identified, you basically put in a stop loss to manage your risk, and of course you put in a take profit. And if you've done your analysis well enough, and you've looked at the fundamentals, of course, you'll be quite surprised how fast the time goes, and suddenly you realize you're making a lot more profit than you thought you would. And also, there's not that pressure to keep on looking. You sort of, once you've done your analysis, you've got your trading plan, you put in your stops, your take profits, you've worked out how much capital you're going to risk on that trade. It's quite a nice way to trade. It's quite it just takes that stress out.
Yeah, exactly. In my opinion, it's the best style of trading to balance with your work life. You don't have to stare at the charts all day. You can enter your trades in the morning. You can manage your positions in the day, like on your phone if you need to. You don't have to be glued to your screen. And you can just continue your life. And you don't have to worry about missing out. And you don't have to worry, as you said, if you've got your stop losses and take profits in the right place, you don't have to worry about losing too much money.
Yeah, exactly. And another simple strategy to use is to create pending orders. And it's quite a simple strategy. So they aren't implemented immediately, of course. The word pending would give you that idea. So if a stock is trading at, for example, $20, then you can place a buy stop at $23 and a sell stop at $18. And in this case, if the stock rises to $23, a buy order will be initiated. But if it drops to $18, a short order or a sell order will be initiated. So pending orders also, they're very useful. Useful.
Really good for catching trends.
Exactly.
Yeah, really good. And in line with that as well, I mean, talking about these pending orders, I mean, another important thing is automated trading systems. So using bots as well. I know this is very popular. I don't use them so much, but I know a lot of traders with full-time jobs do use them, and they'll trade on your behalf and based on a predefined set of rules or parameters that either you create or that are built into your bot if you purchase one online. And this includes stop orders, take profits. It'll follow technical analysis rules. And the great thing about automated trading, which is I think attracts a lot of people towards it, is that it removes any emotion from the trading process. So you don't have to worry about trading psychology in this process. I mean, you have to worry about trusting your bot, but as long as you trust your trading bot, then it can really take a lot of the stress out of trading. Absolutely. With a day job.
Absolutely, and you'll be sure to stick to your rules by letting the robot do it.
Yep.
And another reason it's possible to day trade part-time is that many brokers have introduced, as you said you didn't have when you started trading, is mobile trading. So there's some brilliant trading apps, and they usually have most of the features that you need to trade. But what I notice is that there's limited functionality on the mobile compared to the desktop versions of the trading platforms. So you'll want to do your analysis on your home, on your desktop, and then just use the mobile application to track performance. And then, of course, if your trades aren't going well, you can close them if you see that you've maybe speculated, if it's slightly off, or you think you could open a better position in a different way. But again, always do the analysis on your desktop, because it's very difficult to see the charts on such a small screen as well.
Yeah, exactly. And don't be tempted to overtrade on your mobile phone either.
No.
I know there's a real temptation with that. And also another thing with mobile phones, you've got to be aware you need a good connection, right? Mobile connections sometimes aren't great in a lot of parts of the world. And you might get a lot of lag, or you might get shut down. So don't rely on your mobile phone. As you say, like, make sure you've set everything up properly on your desktop before you head out for the day. And lastly, and most importantly, and something which I failed to do the first time I started trading, is you need to develop a trading plan. And especially one that's going to fit your schedule and your lifestyle. So you want to identify the times when you can monitor the market. You want to identify the times you can execute trades. You want to focus on the quality trades that have a high probability of success. And you want to include, in your trading plan, make sure that there's no space for you to overtrade. either. This will lead to unnecessary losses. Absolutely, it will lead to it. And as part of your trading plan, as we've mentioned, use stop losses, use take profits, manage your risk, protect your capital.
Exactly. Yeah, so I think that about covers it. But yeah, I mean, balancing full-time work and trading requires a lot of discipline, a lot of dedication, and of course, a solid trading plan. But I think, if traders that are battling sort of follow these general tips, then I think, I think you can achieve success in trading while balancing full-time work. And it is possible. And of course, in the beginning it's difficult because you're still learning and you're still figuring it out and you're still getting used to the market movements. But later on, once you've fine-tuned all these, various aspects of trading while working, I think you can be successful. And of course, a lot of people trade because they want to become full-time traders. But of course, if you want to open an account, you need some money to do that. So most traders will have to start with trading while they're working.
Absolutely. And always come back to this thing that, Chris Weston said at Pepperstone when we interviewed him earlier this year. In your first year of trading, when you've got especially important when you've got a full-time job, don't worry too much about making large profits. Just keep your head above water. Make sure you understand the market. Stay alive. Protect your capital. And understand and find yourself a system that works, and you will achieve success.
Yeah.
As long as you stay in the game and you exercise caution.
Yeah. Exactly.
Cool. All right. Well, that was good. Hopefully, that's going to be useful and interesting for a lot of you guys out there. What are we talking about next week, Alison? We don't know what we're talking about next week. What are we talking about next week? We're talking about. I think we're talking about mean reversion.
Yes,
next week.
We are talking
so back into technical analysis again. Cool. Look forward to it. Have a great week ahead, Alison.
Thanks, Chris. You too.
All right. Bye.
Cheers.